we probably will see some turbulent waters ahead. And the inflation, we're seeing numbers coming out, pointing to around 7% inflationary rates. But any of us who have gone to the grocery store lately, we see that seems to not maybe capture the full picture. So there's a number of factors in there. But again, I think all of it bodes well to having a solid core investment in gold. Having a balanced portfolio, but certainly having an investment in gold certainly acts as a hedge against inflation. It gives you a physical product which one can have touch and feel and have certainty that going forward there's a base and a stability there too. So I think that fundamental is still there. That still drives the desire and demand for gold, and that should keep gold prices solid, if not increasing as we go forward.
Welcome to this RTD interview. Today, I'm excited to have first-time guest, Mr. Alastair Still. He's the CEO of Goldmining Inc, a gold junior company focused on acquiring and advancing projects in the Americas. And today, Alastair joins us to share his thoughts on the economy, precious metals, as well as opportunities in the mining space. So, Alastair, welcome to RTD Interviews.
Great to be here. Thanks very much for having me today, Mike.
Yes, sir. I appreciate you taking time to join us. Looking forward to getting an update on what's been happening with gold mining, and also to find out your thoughts on the current lay of the land. But before we do that, just curious, for those who might be new to the community, can you share with us a little bit of your background and how you've arrived at this point in your career?
Oh, absolutely. Be pleased to. I did join gold mining just over a year ago now. I originally started as the Chief Development Officer, and then in April this past year in 2021, I became CEO. I come from a background having worked for major producing companies such as Newmont and Goldcorp, Kinross, Placer Dome, almost 25 years working for major mining companies. So I have a good experience at the operational level, doing exploration in project development and working in the corporate side of mergers and acquisitions and corporate development.
All right, sounds good. Thank you for sharing that. And so I want to dive right in. And so before we get to the nitty gritty of everything, as far as the importance of having precious metals as well as exposure to the mining sector, curious to get your thoughts on the lay of the land. And so based upon where we're heading, entering 2022 right now, what are some things that concerns you, and how would you assess the current environment we're in now from a macro as well as just a local domestic economy standpoint?
Well, there certainly seems to be lots of topics on the economy and what's happening in the world, but I think a lot of it is really centered around some of the uncertainty we still have with COVID-19 and what impacts it may have on the economy and jobs and restrictions, etc. And so that's something that perhaps we can't control, but I think we're over the worst of it now. Hopefully we're on a road to recovery. I think all of those factors are things that the mining industry has been very good at adapting to. Operating companies have some of the strictest and most stringent operating policies and safety protocols in the world. So the mining industry has actually fared, reasonably well through the COVID and the pandemic. Mm-hmm. So that's a sign for our industry of what good operators we can be, and that's something I see we can advance on going forward. But I think what that does, though, it does create some uncertainty in the times, and there's some concerns about inflation and what may happen to interest rates. But I think all of those things may give us some, a little chop in the waters on the economy, but long term, I think it all still bodes well for having precious metals in one's portfolio, especially gold. The fundamentals are still there, and I think long term it's still pointing towards a strength in the gold price and reason for investors to actually invest in the physical product as well as equities who invest and explore for gold.
Right. Understandable. So one of the things I want to definitely get your thoughts on, because you hinted at the word inflation. And so figures came out of CPI from December of last year. It continues to increase higher. And of course, the narrative mainstream wise is the cost of everything is going up, but yet the numbers are not really equaling up to what people are actually feeling when they go to the store or whatnot. So based upon your thoughts on inflation and the Federal Reserve's response to it or attempt to respond, how do you think that's going to fare out? Do you think they'll actually be able to, get to some of those interest rate hikes as well as, dialing back from their accommodative policies without causing any hiccups?
Well, it's an interesting question. I'm certainly not going to pretend to be an economist, but my view on it is that we probably will see some turbulent waters ahead. And the inflation, we're seeing numbers coming out, pointing to around 7% inflationary rates. But any of us who have gone to the grocery store lately, we see that seems to not maybe capture the full picture. So there's a number of factors in there. But again, I think all of it bodes well to having a solid core investment in gold. Having a balanced portfolio, but certainly having an investment in gold certainly acts as a hedge against inflation. It gives you a physical product which one can have touch and feel and have certainty that going forward, there's a base and a stability there too. So I think that fundamental is still there. That still drives the desire and demand for gold, and that should keep gold prices solid, if not increasing as we go forward.
Right, I do agree. And then one of the things I know, the community has been concerned with is the fact that everything has been a beneficiary of all the accommodative policies except gold and silver. To this day, the commodities cycle right now, and copper and you name it, it's all experiencing all-time highs, but not gold and silver. So a lot of people have become discouraged in regards to just not seeing the price action. And then one of the concerns I hear a lot, and I have to answer, is that if there is another market correction, gold and silver tends to fall with it, therefore the mining space as well. So will this time be different, or should we expect that if something like that was to happen in the near future?
Well, that's a great question. I think one of the things to bear in mind too, even at the current prices around $1,800 per ounce of gold, that's still a solid price. I mean, we see it going forward, and we're gold bulls, so we believe in that. But I think even at $1,800 gold, one has to bear in mind that the key operating companies have really turned their stories around to become profitable enterprises. $1,800 is a strong price. Many of the majors still do their forecasting and budgeting at $1,200 gold. So they're building in that natural margin. So the margins are still strong. They're going to get higher as the gold price rises. And I think another element that we've seen in the last 10 years is a fundamental shift. When the focus turned to the major mining companies to become profitable and to spit out dividends, their first gut instinct was to cut exploration, cut their future, and to the expense of getting dividends and profits today. But that's not a long-term gain. And what we've actually seen in the last 10 years is the reserves have been declining as the money has not been reinvested back into their business. We're seeing a change now that their money is being respent on exploration, reinvested, but it's not a ship you can turn around very quickly. Exploration takes time. And that's why I think projects such as we have in our portfolio, some 32 million gold equivalent ounces, that now makes them that much more attractive to the majors who are looking to backfill their own production profiles and pipelines. And that makes our projects sought after and attractive, and it keeps the demand up, which should help buoy the price as well, for not just the metal price, but for the equities that are underpinning those resources as well.
All right. So basically what you're saying is because of demand, you see, I guess, gold joining the commodities boom, or the super cycle, as a lot of people like to use, relatively soon because of the increased demand.
Well, I also would like to point out too that within gold mining, we also have a significant exposure to copper. We're primarily a gold-based company, but we have almost 20% commodity exposure to copper. And as your viewers and followers will know, copper has been extremely high. And we have gold projects with copper credits in them, significant. We have almost 2.7 billion pounds of copper in our resources. So that's a significant component for us as well that helps make our gold projects more attractive as well. And it's not just the super cycle is going to be a boom or bust thing. Even just thinking about electric cars and the push to get transitioning to electric vehicles, that's something that's probably not going to change anytime soon. And what we're seeing is, even as batteries change and the technology for battery changes into different metals, the infrastructure still is all underpinned by copper. So all the electricity and the grids that are going to be needed to tie in all these millions of electric cars that are going to be built, the fundamental metal still there is copper. And so I think the fundamentals for copper are strong, very much so on a supply and demand basis.
All right, very true. And then speaking of which, I remember over the last past year or so, how copper was getting headlines a lot. A lot of people were talking about all-time high in copper, and a lot of people using it as an indicator to the trajectory of this going green movement. And so, unfortunately, gold doesn't get as much love as it used to. And so, does that surprise you at all? And also, we have the new digital asset that's stealing all the thunder. What are your thoughts on all that? How come gold's not getting its fair share in the sun just yet?
Well, I think in terms of the the cryptocurrencies and that, I mean, sure, they may have a place, but I'm still of the belief that this it's a technology gain, and the entry point to enter that space, there doesn't seem to be a barrier for it. So that's why we're seeing all these new cryptocurrencies. And which ones do you pick? I'm certainly not going to be the one to speculate on that, but there's something about having a physical asset in gold that won't evaporate or won't disappear if the technology changes or the sentiment changes. And I think also, just on a company such as gold mining, where we have protection, is not just on the exposure to gold price, which we see going upwards, but we also have a very healthy balance sheet. We have over $100 million in liquidity on our balance sheet, and a big portion of that is the 20 million shares we have in Gold Royalty Corp. So having that strong balance sheet as well gives us protection, and if there is a downside, and these things may go through cycles, but that's protection for us, but we still see more upside than there is downside, of course.
Right now, looking forward. So a lot of the RTD audience, they're heavy, physical. They hold gold and silver physically, and so we're dipping and dabbling into the mining space. So for somebody new, perhaps just getting involved, trying to figure out how to determine a good company from a bad company, what are some things you can give to possibly a newbie that might be looking to just learn how to navigate these waters?
Well, I think there's a couple of things. First of all, you need to look at the fundamentals of the company. And there's two fundamentals that everyone should look at first: is the assets of the company and who's running the company. Mm-hmm. So take, for example, gold mining. We have an experienced management team. We have operators who've worked for major companies, have experience creating growth for shareholders, not just with gold mining, but with other companies. Our chairman and founder, Amir Adnani, not only founded gold mining, but is a co-founder of Gold Royalty Corp and two uranium companies as well, Uranium Energy Corp and Uranium Royalty Corp. So an experienced management team is one box I would think all your investors would like to check off when they're reviewing a company. And the second thing is the fundamentals of the assets. And I think there's probably no junior company out there that can have a comparable portfolio of assets that we have. And I think having a large portfolio gives an investor a couple of advantages. One, doesn't put all your eggs in one basket. So we have projects right now. There's 11 projects throughout the Americas that have resources on them. There's a 32 million gold equivalent ounce resource base on those. So they've got diversity, we've got number of options, and we can be selective, and we're going to focus on our core assets to move forward. But you're also not putting all your eggs in one basket if you were to have just a single asset company. So diversity and exposure and experienced management team, all these things that gold mining has in spades, which I think an investor would be looking at when they're looking at their investment portfolio.
Thank you for sharing that. So let's dive into gold mining. So as I mentioned before, I had a chance to sit down with Mr. Adnani, I think it was about 2 years ago. So curious to find out, some of the recent developments and, so get us caught up if you don't mind, what's been happening and how has everything playing out for you guys so far?
Well, absolutely. And it's interesting that Amir has done an outstanding job of building gold mining, and he's been very patient over the last 10 years, making very astute purchases, making acquisitions that built this portfolio of, say, 16 million measured indicated gold equivalent ounces and a further 16 million inferred gold equivalent ounces to give this giant portfolio in the Americas. Very patient, very timely in those purchases, picked good opportunities. Now, that was a great strategy for the last 10 years, but where I think we're starting to see a return to unlocking that value, and why I came to the company, is taking those models of acquisition, building this portfolio, now starting to unlock the value. So I've come from a world of operating companies and exploration and development, where we now transition from being just holders of assets to unlocking the value. Think of it somewhat like a farmer. We've been planting the seeds. We've acquired this portfolio of assets. Now it's time to harvest. We can start unlocking the value as we de-risk these projects and move them forward. And that's the path that we've been on lately. And we've made some announcements recently. We've started some studies on our projects. We did a fundamental step throughout 2021. And we updated the mineral resources for the core projects. Some 75% of our resource statement had new resources calculated on it. So that's kind of foundational to the next stage of growth. And since then, we've now also started on a number of PEA studies, or preliminary economic assessments, where we take those resources and we start to run the economics and develop a mine plan to see where the opportunities are and see what kind of value or wealth can be created from those assets. That's what we've been engaged on the last several months now.
Now, when you say unlock some of the value, can you elaborate a little bit more on that, as far as assuming bringing some projects to fruition? Like give us, because I know gold is primarily the focus, but then again, you guys have so many other minerals and assets you guys have with that.
It's a great question. I think one of the ways that we can unlock value in the portfolio is, I'll take the example of last year, we created a new company called Gold Royalty Corp. And we created that company by taking the existing portfolio at gold mining, writing small royalties on the assets we had, put that into a new vehicle, brought in an experienced management team led by David Garofalo, former CEO of Goldcorp, and John Griffith, decades of international banking experience and equities experience. So an experienced team underpinned by a solid resource base. And that company went public in March, an IPO through the New York Stock Exchange. It raised $90 million. So the market was there for it. The demand was high. It was upsized twice. I think that was a validation of the assets that were in our portfolio that were written or used to create these royalties. That is just one way we've shown to unlock value. And the way that gold mining has benefited from that, we're still the largest shareholder in Gold Royalty. We own 20 million shares in that company now. And it's trading at pretty close to, let's call it approximately $5 a share. So $100 million in value we've crystallized by creating that asset. That's on our balance sheet, and that's to the benefit of the shareholders of gold mining. That's just one example of one way we've unlocked value in the portfolio in the last year. And the second part of that strategy is we have a number of opportunities for perhaps further new cos or spin cos like Gold Royalty, but it's also to directly advance and de-risk the projects. So PEA studies, further work, plan to get into some potential drilling throughout 2022. These are all steps that haven't been done by gold mining before, and they're important stages that we go through as we let the market react and try and decipher what's in our portfolio. Because one of the key fundamental drivers on value on our company right now is that we have an absurd value on an enterprise value per ounce. It's below $5 per ounce on this large portfolio. And that doesn't compare with any of our peers. Our peers might be, and you can pick a basket who you might want to compare us to. It could be $20, $30, $40 per ounce. So we think there's an enormous upside to capture that value on a re-rating as we start to advance our projects, de-risk them, and make the market aware of it. At the same time, though, we still have this strong balance sheet. It's got $100 million in liquid assets and Gold Royalty shares, which are a long-term hold for us, but add to our balance sheet. That protects us from the downside. So, unlocking value on the projects as we de-risk them, and potential other spincos and newcos as we move forward as well.
All right. And then also, I was happy to just looking at some of your current investors in the project. And so a lot of guys I've interviewed before, Doug Casey and Rick Rule, and a couple other guys that, that kind of shows the confidence that they have in what you guys are doing. So definitely interesting there. So can you speak a little bit to some of the current investors and what they
that's
bring
a
to the
good
table?
point. There are a number of key investors. I'm also pleased to say that over the last while, we've added a number of analysts who are providing coverage on the company, and they've done some excellent reports. And I would direct some of your readers to those reports, and those can be accessed on the website. We now have coverage from H.C. Wainwright, Roth, Haywood, and Laurentian Bank. So there's at least 4 companies now providing comprehensive reports and analyst coverage on us. And there's some great views in there that your readers can check there to see a third party's view on what they think of the assets and what the upside might be.
All right, sounds good. Well, so if you don't mind, as we get ready to draw towards the end, of course, I'll link a lot of the information beneath this video here. But looking at the future, you talked about unlocking value for investors. Time frame wise, by the end of this year, what would you like to have accomplished and head into following year? And give us some time frames, if you don't mind, as to what people can expect as far as progress for you guys.
Absolutely. It's a great question. And I would point out that just this morning, we did announce the PEA results, the preliminary economic assessment on our La Mina project in Colombia. That came out this morning. There was a very strong economic case for that. So we will be doing further work on La Mina as we start to de-risk and look for opportunities to enhance that value. We also have a PEA underway on our San Jorge project in Brazil. We've announced some sampling programs that have already begun on that. So we've already started to identify some opportunities there. We'll see some more news on that. And so those projects will continue to de-risk and move forward. And I think the other part that we talked about earlier was the new co or the spin co, something like we did with Gold Royalty. I can see opportunities there as well. And one project we didn't even talk about today is that gold mining also has a significant uranium asset. We own 125,000 hectares of some of the most prospective uranium lands in the world, the Athabasca Basin. And this is a part of the world where, the average grade there on the deposits is some 100 times the world average grade of uranium deposits. So high grade uranium, the price on uranium has been rising, but it's still only about a third of its all-time high. So we see lots of upside there. And that's just one other project in our portfolio that doesn't even get attention. But a lot of juniors that get created and are exploring this part of the world have $50 or $100 million market caps on much smaller land packages than we have. So there's another opportunity there that we can try and unlock value for later this year as well.
All right. Wow. So it sounds like you guys are loaded with opportunities there. So you guys have a lot of irons in the fire, and whatnot, adding value. So thank you for laying that out for us. So you guys are publicly traded. Give us some of the ticker symbols and whatnot. Of course, I'll put that beneath the video. But share with us a little information how people can get plugged in and find out more if they want.
Absolutely. We're listing on the New York Stock Exchange. GLDG is the ticker symbol. We're also listed on the Toronto Stock Exchange. Easy one to remember, GOLD, gold. And people can reach us at our website, www.goldmining.com.
All right, sounds good. And also, I'll put a report to godnews.com as well beneath that as well. So once again, Mr. Still, thank you for joining us on RTD Interviews and giving us an update as to what's going on. But definitely, you guys made a lot of progress since I last had a chance to connect. But thank you for joining us on RTD Interviews. Looking forward to following progress. And of course, hope we have you back on later this year and see where we're at that point. So thanks for joining us.
Yeah, thanks for having me. And I look forward to speaking with you again soon.